Today, we're looking at a framework that is going to completely shift how you think about personal finance. It is just so easy to get caught up in all the noise, right? The hot stock picks, the market trends, hunting for that one perfect asset. But according to our source material, the absolute biggest mistake most investors make actually isn't picking the wrong stock, it's investing at the wrong time in their financial journey. So today, we're going to explore a sequential roadmap to wealth preservation and see exactly how the order of your investments dictates your success. Okay, let's dive into this. What if literally everything you've been taught about investing is backwards? We hear it all the time. Just get your money into the market as fast as possible. But the reality we drew from our sources today is that skipping essential steps before you start buying assets could silently cost you thousands of dollars, and you might not even realize it's happening. There is an exact specific sequence that wealthy people follow to build real lasting wealth. And skipping ahead? Well, that's just a recipe for disaster. I absolutely love this line straight from our source. Imagine trying to build the second floor of a house before pouring the foundation. I mean, it sounds totally ridiculous, right? You would never ever hire a contractor who started framing the roof while the ground was just a pile of dirt. Yet miraculously, that's exactly how most people handle their hard-earned money. They want the penthouse view before they've even laid the concrete. So here is our visual blueprint for today's explicator. 1. The backwards investing mistake. 2. Pouring the financial foundation. 3. Eliminating expensive debt. 4. Securing free instant returns. 5. Shielding your future wealth. And finally 6. The true wealth secret. Let's move to and see how this builds. Section 1. The backwards investing mistake. The blueprint illusion. So the fatal flaw of this blueprint illusion is starting at the very end of the process. People take their very first paycheck or their savings and they buy stocks or crypto right out of the gate. They're basically just hoping for the best. It's the thrill of the chase, you know? They're hoping to magically find that next big winner that's going to instantly make them rich. But the real secret? It's not about that misguided excitement. Successful investing starts long before you buy your first stock. It is all about investing in the exact correct order and building a resilient financial foundation first. So, what actually is that correct order? Well, here is your sequential roadmap. I really want you to use this structure as a mental anchor for the rest of our explicator. Step 1. Emergency fund. Step 2. Pay high interest debt. Step 3. Employer match. Step 4. Tax advantaged accounts. And finally, Step 5. Your regular brokerage account. We're going to unpack every single one of these, but simply seeing them stacked in the specific order proves a fundamental rule of personal finance. The order in which you deploy your capital absolutely matters. All right, section 2, pouring the financial foundation, the concrete that stops you from starting over. This first step happens way before you ever open a trading app. We are talking about building an emergency fund of 3 to 6 months of living expenses. Why? Because without this cash cushion, an unexpected life event, and they always happen, forces the premature liquidation of your hard-earned investments. And guess what? That usually happens at the exact worst possible market moment. You create this financial cushion so that when market storms come, your financial house stands firm. Moving on to section 3, eliminating expensive debt, stopping the leaks. Now, what's really interesting about this slide is the sheer mathematical power of this single number, 20%. Let's say you've got a credit card charging you 20% interest. Every single dollar you pay toward clearing that high interest debt is effectively earning you a guaranteed 20% return. Think about that for a second. There is absolutely no stock, no bond, no crypto asset anywhere in the world that can promise you a guaranteed 20% return year after year. Eliminating expensive debt isn't just about, being responsible. It is literally one of the most lucrative mathematical moves you can make. Every dollar saved in high interest is a guaranteed win. Next up, section 4, securing free instant returns, erecting the frame. The instruction here is crystal clear. Always grab your employer's retirement match. If your company offers to match a percentage of what you put into your retirement account, you take it every single time. It is literally free money. Taking advantage of this instant return is just grabbing cash that you're already entitled to as part of your compensation package. It requires zero smart stock picking, zero market timing, and absolutely zero risk. You put $1 in, they put $1 in. It's an instant 100% return on your investment, and it forms the solid frame of your wealth house. Let's look at section 5, shielding your future wealth, installing the roof. Okay, so if the foundation and the frame are solid, you now need to install the roof to protect your capital from long-term taxes. This means maxing out tax advantage accounts like an IRA, an HSA, and contributing more to a 401k or equivalent retirement plan. These specific accounts basically act as a protective shield for your money. They are legally designed to reduce your tax burden over the long haul. And what does that mean? It means you get to keep significantly more of your investment gains. Remember, it's not just about what you make, it's about what you actually get to keep. Which brings us to section 6, the true wealth secret, the finishing touches. So the crucial point is, this final step reveals what actually separates the wealthy from everyone else. Regular brokerage accounts. Only after you have established your emergency fund, wiped out the high interest debt, secured your employer match, and shielded your money, only then should you invest your extra money here. Wealthy investors don't just know where to invest, they know when to invest and in what order. This step is for chasing those higher returns, but you only do it once all the essentials are fully covered and your foundation is completely unbreakable. Our source material leaves us with this incredibly powerful, kind of mic drop thought. The people who win aren't always the smartest investors. They're the ones who never had to start over. This completely shatters the whole myth that building wealth is just about getting lucky or being some sort of financial genius. It's really not. It is about making the right financial decisions consistently, year after year, in the correct order. By following this sequential roadmap, you ensure that you never get wiped out by a forced liquidation or completely crushed by credit card interest. You just let time do the heavy lifting for you. Which leaves us with one final, deeply important question to ask ourselves today based on everything we've uncovered in this explicker. Will you build an unbreakable foundation, or will you just keep hoping to get lucky? If this breakdown changed how you think about the sequence of investing, I highly encourage you to follow along for more practical, step-by-step money lessons that actually help you build real wealth. Thanks so much for joining me, and I'll see you in the next Explicker.